Hey guys, today we're talking about recasting a mortgage. A lot of you may have heard of refinancing one, but this is an alternative that doesn't cost you a whole new loan and, closing costs and all these things, right? So what I'm doing in my life today is actually considering a recast because the recast cost me only $250 to do. I pay down a chunk of principal and I lower my payment. Now I don't get to change my interest rate. But that's okay because in today's market, the interest rate that I have is 6.99%. It's kind of where it is now, 6.5 to 7%. It's been floating around the last few months. So for me to refinance to get my rate to let's say 6.5, it saves me a little bit of money, but it also costs me a lot of money to close and refinance that loan because it's just like when you first bought a home. Those closing costs that you have to now pay again, plus usually a lot of points. So all that gets bundled into the new loan and it affects your monthly payment. So without having to worry about any of those headaches, I'll pick up the phone, pay the $250, and then I just choose an amount that I want to pay my principal down by. So that could be $10,000, $20,000, $50,000, whatever you're comfortable with. You put towards the principal, you reduce your mortgage loan, and at the same time, you reduce your monthly payment. And your rate stays the same, but you're still saving on a monthly basis. And this doesn't stop you from refinancing later. You can recast multiple times depending on your lender, and it doesn't stop you, like I said, from refinancing later. So if I want in 3 months from now, after I do the recast, and the rates drop let's say to 5.5%, maybe then it makes sense to do the refinance. So this is a great alternative for you if you are looking to reduce your home costs and your mortgage is stuck at a very high payment right now that you're not comfortable with. So look at doing a recast. Ask your lender if they can do it for you. Some of them require a minimum amount that you put in. So make sure you get that information. And what is another benefit of this is if you bought the house with less than 20% down initially, you most likely are paying PMI, which is private mortgage insurance. So for me, I'm paying $78 a month for PMI because I only put 5% down. Now, that's money you're just kind of throwing away every month. So it protects the lender, it doesn't do anything for you. So if I recast and I put down a certain amount of money that brings me to that threshold, that 20% down threshold, well, now I can remove the PMI. And I've only had the loan for 2 years, right? So I can remove that PMI by paying the principal down and lowering my monthly payment even further. Because if I don't do that, it takes me now, without doing anything else, probably another 10 years before the PMI will come off automatically. So this is something to consider. If you bought a house in the last 2, maybe 3 years, with a low down payment and you have some cash sitting around on the side that you're considering investing and or paying debt down, consider doing that with your home mortgage and see if it makes sense. You'll have to analyze whether this investment makes sense based on the return that you're getting for that cash. So for instance, if my savings is $100 a month because I recast, I take the $100 times that by 12 months, that gives me $1,200 a year in savings, and then I divide that by my initial investment into the recast, which let's say for this example is $10,000. So you take the $1,200 in savings divided by the $10,000 investment, and that's going to give you a percent. Okay, that's your return on investment, in other words. So you want to see how hard your money is working for you. So let's say that's 10%. Now I got to look, okay, if I put this money in the stock market, how much am I going to make? But I'm also risking something by investing it in the stock market. Or what if I buy another investment property, how much am I going to make? But there's work involved with that. There's risk involved with that. Now, if I do this recast, I'm basically paying down debt, which is risk-free, and it's a matter of a phone call. So it's very little work for me, and the return should justify where I put my money. So that's how you can kind of analyze where you should do, your investments in whether you should pay debt down or not. So I hope this was valuable to you guys. This is something I'm doing now, and it's something that you should consider if you own a home or you're planning on owning one. Understand that that's an option for you. But that's what I got for you today. Thank you for watching, and I hope to see you next time.